Hello, this video is going to be about stop loss placement using the order flow. There are three ways how you can place your stop loss. First way is a standard fixed stop loss, meaning for example 10 pips stop loss. For every trade it is the same, and this is the easiest method. Then you can also place your stop loss in high or low of support and resistance area. I'll show you some examples later. And also you can place your stop loss in low volume area. So for example, if you went short from this volume node, then the stop loss for you would be somewhere in here, low volume area. All right. Now for this method, for the third and for the second, I use 30-minute chart with volume cell content. So the chart will look like this, those shades of gray. All right, that's the volume cell content. Now the reasoning behind placing stop loss in a low volume area is that high volume area should work as a support or resistance zone. So this area should work as a support or resistance zone. In this case, we expect selling a reaction like this, so it should work as a resistance zone. And if the price goes past this heavy volume area, this is the heavy volume area, then the resistance failed, and you don't really want to be in that short trade anymore because the resistance has failed when the price goes past it, all right, past this area. So that's why you want to place your stop loss in low volume area behind those heavy volume areas, which work as a support or resistance zones. All right, so that's the logic. Let's now jump into some examples so it's more clear. So imagine this double node is your resistance. You want to see a reaction like this, and stop loss in this case would be in here. You would place it above this area where the double node got created. All right, so this would be the ideal place for take your stop loss. That is if you of course didn't use the fixed stop loss. All right, now in here imagine you have a support at this level based on this significant volume cluster, so you expect a buying reaction from there. Now this whole area has the low in here, so one tick below it, this should be the stop loss. This is the area I'm interested in, this little rotation. All right, this is the low of this rotation area, and that's why I placed the stop loss there. In this example, this is a strong support, so when there is a pullback you expect a buying reaction, and in this case this is the low of the swing point, so the ideal place for the stop loss would be in here, low of this area. All right, now this is very similar scenario. Imagine long level from here, you expect a buying reaction from those massive volumes. The ideal stop loss in here would be below the low of this area, so it would be in here. Now another very similar scenario, heavy volume area is in here. The most significant volume node is those 1015 contracts. So imagine that you have a long level there. Imagine that you want to go long from there, and the ideal stop loss in this case would be in here, below this low of this area. Now obviously this is intraday trading, so if for example the wick of this candle was too much, then you wouldn't really want to place your stop loss that far from the entry point. So in case like that, it would be best to place your stop loss in low volume area. So for example, in here, this is low volume area, or you could also use the fixed stop loss. So you could, for example, use 10 pip stop loss, which should be somewhere in here. All right, because for intraday trading, you don't want to have the stop loss too wide. Now imagine you have a short level from this double node. The stop loss in this case would be either one tick above the high of this area, this whole area. So this would be the stop loss, or you can also use the fixed stop loss, which would probably be a little bit wider because this is actually pretty tight stop loss. This is just 7 ticks on the Euro futures, which is a bit tight for this trading instrument. All right, so in this case, or in case like that, you may want to consider using a fixed stop loss, for example, 10 ticks, which would be somewhere in here. Now, in this case, it is pretty simple. Significant volume area, support in here, this high volume node, you want to go long from there, and the ideal stop loss, in my opinion, would be in here, below the low of this area. In this example, there's a double node, which means support. So you want to see a buying reaction from it, and the stop loss in this case could either be one tick below the low of this area, so in here, or if this is too tight for you, because it would probably be too tight for me, so in this case I would probably use a fixed stop loss. So if it was 10 ticks, then it would be in here. All right, because this would just be too tight stop loss. Now I must say that this is sort of a matter of preference. There are a lot of people, a lot of order flow traders who prefer to use very tight stop losses and who expect exact reaction to the level, and they use a high risk reward ratio, so they try to catch a trade with a very tight stop loss and then take a huge profit from it. What I personally prefer is trading around risk reward ratio 1, which means that I risk more or less the same amount of money as I get when I take a profit. So this is a matter of preference. If you prefer tight stop losses and big take profits, you can as well place your stop loss in here, just a few ticks below your entry point. Now in here there is a significant double node in here, so this would be a support. You would expect a buying reaction from there, and the stop loss in this case would be in here, below the low of this area. This is the low of the area, that's 7 ticks. If it is not enough for you, then you can also use a fixed stop loss, for example 10 ticks, which would be in here. Now in this case there was a strong downtrend, and within that downtrend 2 significant high volume nodes, also pretty massive volumes in here, so this could work as a resistance. I would expect a selling reaction from it, and the stop loss for this trade would be either at the top of this swing point of this reaction of this area, so it would be in here. In this case, it would be 7 ticks, and if this isn't enough for you, then you can also go for the fixed stop loss and have the stop loss set, for example, in here. Now another example, strong rejection of higher prices and heavy volumes created within that rejection with the high volume node in here, so this is the resistance. I would expect a selling reaction from it, Now, if you like to use tight stop loss, then this would be the best place for you to place the stop loss. This is 7 ticks from the entry point. And if this is not enough, you can as well use the fixed stop loss. For example, 10 ticks. I personally would prefer to have the stop loss in here. This would be a bit tight for me. Now in here there is a strong resistance. Those high volume nodes. So I would expect a selling reaction from there. The stop loss in this case, ideally at the top of this area. So this would be the stop loss, and in this case it's 7 ticks. Now in here, strong resistance, high volume node there. Imagine the price hit the level, and the ideal stop loss in this case would definitely not be in here, at least not for me, because this would be crazy tight. So in a situation like this, when the stop loss would be really too tight, you definitely want to use the fixed stop loss, which could for example be the 10 ticks somewhere in here. But this would definitely be too tight. Now in here, this is a strong support. My long level would be in here, based on the high volume node, and the stop loss in low volumes, which would be in here. The price should react to those heavy volumes. If it doesn't, if it gets lower into the area where the volumes were not so heavy, then I don't really want to trade there, so I would place the stop loss in here, or maybe below this reaction, so 1 tick lower in here. Last example. This high volume node is a resistance created in a downtrend. This was pretty quick, pullback and short from there. And the ideal stop loss, a volume-based stop loss, would be in low volume area. So it would be in here. It would be pretty tight. So if you're not into taking such tight stop losses, then you can as well use the fixed stop loss, which could be, for example, somewhere in here. So you have some room for trade management and to let the trade breathe. All right. Now let's go into the next part of this presentation. In this part, I'll be talking about quitting a bad trade when you realize that you are in a bad position, you want to quit it. So how to quit a bad trade. This is sort of advanced stuff. You don't need to do that. I have sort of mixed experience with this. Sometimes you can really avoid bad trades really nicely with it. And in some cases, unfortunately, you miss potential winners because you just jump out of the trade too soon. So this is advanced technique. You don't need to use this one if you don't feel sure about using it, all right? So when you want to quit a bad trade, when there's no reaction to your trading level, no reaction at all, the price just shoots past it, there is a pressure which goes against your level, buying or selling pressure, and the price shoots past your level and the pressure continues. So if you look at the picture, price goes downwards. Imagine that there is a support. You entered along from there, but there's no reaction. There are selling imbalances. Delta negative. The next footprint delta is also negative. You have big numbers on bid, which means aggressive sellers pushing the price downwards. Heavy volumes below your entry point. This doesn't look good. So what you want to do when you identify a bad situation like this, you want to quit at break even at the place where you entered. So when there is a pullback, if there is a pullback, then you want to quit in here at break even. Now to identify those bad trades, I use a 5-minute chart and the bid-ask visualization of the footprints. I do this in order to see the aggressive buyers and aggressive sellers. Let's now have a look at some examples so it's more clear. Selling activity. Imagine that this is your support. You go long from there, but the price goes past your level without any reaction, and you see that there are selling imbalances. In here, also in here, delta is negative, so in this place you know that it's bad. More selling imbalances, those selling imbalances in here, the price is below your level, the whole 5-minute candles below your level, which is another warning. So when there is a pullback to your entry point, this is the best place to quit your trade. Don't hope that the price will turn and go upwards, because the sellers are clearly stronger in here, so you want to quit your trade when you are offered a chance. And this chance doesn't usually last too long, so you need to be quick, alright? Another example, imagine that this is your resistance level where you go short from. There's no reaction to the level, there are buying imbalances, aggressive buyers pushing the price upwards, strong buyers in here, delta is positive, whole 5-minute candles formed above your level, which doesn't really seem good. Still, delta is positive, so when you are offered a chance to quit at break even, you should do it. Now another example, imagine you have a support in here, you went long, but there's no reaction at all, the price is still slowly going through your level. Huge numbers on bid, there is a selling imbalance. Again, big numbers on bid. Also in here, delta mostly negative. Whole candles below your level, so the best thing to do is quit in here at break even. Now in this case it's not so clear cut because there are buyers jumping in, aggressive buyers, which is sort of tempting to stay in the trade, but afterwards selling imbalances, which is not good at all. So if you are offered to quit the trade for the second time, you should do it. Let's go into another example. The price is going downwards towards your support level. You go long, but there's no buying reaction at all. Delta is negative. Huge numbers on bid. No sign of buyers. 2 whole candles below your level. Again, selling imbalances in here. So in case like that, you just pray that there will be a chance for you to quit at break even. So when the price hits the entry point again, you are offered a chance, a quick chance to get out. And you should take the chance, alright? And you should be quick. Now in here, imagine that this is a resistance zone. The buyers are pushing the price upwards. There's no reaction whatsoever to the resistance. Delta is positive most of the time. Whole 5-minute candles above your level. Price continues upwards. There are buying imbalances. No reaction at all to your level. Now in here delta is close to 0 or slightly in negative numbers, but there is not really any sign of aggressive sellers. So this whole situation doesn't look very promising with a short trade. So the best thing to do, wait for pullback to break even, and if you are offered a chance, you should take it and quit the trade in here. Alright, so imagine that this was a resistance, you went short from there, but there's no reaction whatsoever. Delta is positive. it's really positive, and there are also those buying imbalances, and this is real bad because you see that the buyers are aggressive, way stronger than the sellers. They are dominating the market, pushing the price upwards. There is a rotation above your resistance level, which is also bad. So when you are offered a chance to quit at break even, you should take the chance. All right, in here at first touch. Now this is very similar scenario. Price is going upwards. Imagine that this is your resistance level. You went short from there, but delta is positive. Also in here, delta is positive. No reaction whatsoever to the resistance. There are buying imbalances. The price goes above the resistance. A lot of buyers in here, a lot of aggressive buyers. So when you see this, you know it's bad. And then there is the rotation above your resistance, which is also bad. What you want to see is a quick reaction to resistance, not a rotation above it. Alright, so it seems that the higher price was accepted and there is some temporary balance above your level. Doesn't seem good at all, so when you have a chance, you should quit your trade at break even. By the way, this is also the reason why I like to use wider stop losses for those intraday trades using the order flow, because I have some room to do stuff like that, to watch the order flow and decide whether I want to stay in the trade or no. If my stop loss was too tight, let's say like 5 ticks, it would be, for example, in here, I would just take the stop loss and that would be it. But this way, there is some room for the price to breathe and for me to think about the situation and possibly to quit the trade at break even if I don't like the development. Alright, so this is also the reason I like to use wider stop losses. Alright, last example. Imagine that this is your support. You went long from there. Price went towards your support pretty aggressively actually. There are selling imbalances, negative deltas. As the price shoots past your level, there are also selling imbalances. This doesn't look good at all. Then you see those big numbers on bid, and this is sign of aggressive sellers at the low of the footprint. And this is a thing which usually gets tested. Heavy volumes at low of a candle, so especially in a trend. So when you are offered a chance, you should quit the trade. You can do it right here, or you can do it after this whole footprint got formed below your support. So you can also quit in here. But I would probably quit in here because of this. Heavy volumes like that at low of the candle in a downtrend usually get tested, like they got tested in here. So that would be the warning for me, and that's why I would quit the trade in here in this footprint. Alright, so that's for this video, guys. I hope you found it helpful. Now again, let me repeat that you don't need to manage your trades like that. You don't need to quit a bad trade like I showed you, because this is really an advanced technique, and if you are new to order flow, I would just use a standard stop loss and not to try to quit your trade at all at break even like this, because most likely if you don't have the experience, this would just make you miss a good winning trade, because you would get scared too soon and you would quit too many potential winners. Alright, so that's my advice on this advanced method. So anyways, that's for this video. Thanks for watching, and I'll see you in the next one.